Hello my dear friends, I hope you all are doing good. This is Prashant Mauni and I warmly welcome all of you to analysis of bi-monthly monetary policy of RBI. Dear friends, today we are going to start with what monetary policy is all about, why we need to understand it, and of course we are going to see who takes all these decisions pertaining to monetary policy, and we will also see the challenges that are there for the country and for the economy to face, and we'll also discuss about how we can come out of all these things. Anyways, before cracking on this topic, I would like to introduce all of you to our pen drive and tablet courses for different exams. StudyIQ provides you different pen drive and tablet courses. They are designed by the best faculties of our country. If you want to know more about it, check out studyiq.com. Now dear friends, monetary word comes from Latin language. In Latin, you have a word called moneta, and moneta means money. So monetary policy is basically a policy on money. It is a macroeconomic policy. Macroeconomic basically means a policy or a decision that is going to have impact on you can say on the entire economy. It is going to have impact on a national level rather than on a micro level, or you can say on your neighborhood level or your district level. Not at all. Any macroeconomic policy will have impact on national level, right? And this monetary policy is laid down by Reserve Bank of India, right? That's what happens in different parts of the world as well. If you take the example of America, then you will find the Federal Reserves, right? It is the Federal Bank, or the you can say central bank of USA, that will take all the decisions regarding monetary policy of USA. Anyway, one of the main job of this monetary policy is to control the supply of money as well as control interest rate. Now, why we need to control this money supply and interest rate, we will chat about it in next slide, but let's see some basic things about it before we understand why this money supply and interest rate is, or controlling interest rate is necessary, right? Here are some of the objectives of macroeconomy, right? You have under this monetary policy, you ensure that inflation is in a sort of comfortable level. You have a sort of bracket here, right? You have to ensure that the inflation stays between these two brackets. Too much of inflation means inflation going too high is also not good for economy, as well as if it is dropping down, right? If it is crossing some level, then that is also a not good scenario. The other thing is consumption, whether the consumption is going up or whether the consumption is going down. And consumption is not just about fruits. You can take anything, whether people are buying car or whether they are not, whether people are buying new houses or not, etc, etc. And also checking, one of the macroeconomic objective is to see that the economy is heading towards or it's in a sort of it is growing rather than collapsing, and also ensuring that the money that is there in the market or with the bank is in liquid form. Money, as you can understand, it is a sort of lifeblood for the business, isn't it? If you want to expand your business, if you want to purchase something, if you are a businessman or a businesswoman, then you can understand that without money you cannot do anything. If you go to a bank for money, and if the bank tells you that come next year, then by that point of time things would have changed, and the opportunity that you were trying to achieve or make it into or to convert that opportunity into business has gone now. So money is of course necessary. Liquidity should be there. It should not be too much liquid. Everything should be in moderation. This is a sort of bottom line. Now you have to decide what moderation is all about. Anyways, this monetary policy, by implementing it or how it implements, RBI it ensures that everything is under its control. It has many tools, you can say weapons, in its hand to make sure that everything is doing okay in the market. And you have this open market operations, and you have bank rate policy, right? Today our main focus is on this one, bank rate policy, because I believe once you understand this bank rate policy thing, how it works and what are its impact and things like that, then this topic will be clear for you, right? You will have a good understanding on this thing, and I'm not exaggerating matters here, but this will save your nearly 30 hours of study in 30 minutes once you understand this thing. So let's see other tools that RBI has. It's reserve system, then credit control policy, moral persuasion, and things like that. Now let's take this bank rate policy, what it is all about. Imagine RBI, right? You have RBI bank, a central bank, and then you have another bank, SBI, say for example. Now SBI needs some money to give it out as a loan, so it will go to RBI and ask for some money. Then of course it has to give something in deposit. It has to keep something as a security with RBI, and RBI will issue some money. Now of course RBI is not doing a charity job here, right? RBI will charge some sort of interest on the loan that it is giving out to SBI. That interest rate is known as a repo rate. It is also known as lending rate. Just in case if RBI needs some money from SBI for whatever reason, then RBI will do the same thing. It will keep something as a deposit with SBI, and SBI will give the money to RBI, and RBI has to pay interest to SBI, and the interest rate, that interest rate we call it as a reverse repo rate. I hope this is clear. It is a transaction taking place between, you can say, a father and a daughter. Then you have this credit control policy. Again, let's take example of RBI and SBI. Imagine that SBI is having 100 rupees in its hand, right? And now it wants to enter into banking business. So RBI will lay down the terms and condition. RBI will say that out of that 100 rupees, you have to keep 30 rupees with us, right? We will keep this 30 rupees just in case if you do any sort of dirty business. So now SBI will be left with what? 70 rupees. With this 70 rupees, it has to do all the business, giving away loan and things like that. Now if RBI thinks that the money supply should be increased, what RBI will do is it will make a sort of necessary change in this law. It will say that rather than keeping 30 rupees with us, you can just keep 10 rupees. So you can have 20 rupees back, and in this way it will have 90 rupees. SBI will have 90 rupees, so it can do a bit more business. It can give out to other people who are in need. So this way supply is increased, and if vice versa, if it thinks, RBI thinks that it wants to reduce this money supply, then it will increase this thing, and it will say now you have to keep 50 rupees. So now SBI would be having 50 rupees in hand. So I hope this thing is clear to you. In this way it can use mix and match, right? It can make changes with both these things, reserve system as well as bank rate can go up and down and things like that, right? So this is all about increasing interest rate and money supply, and there are basically two types of you can say monetary policy. One is in one you have the supply of money, or the flow of money is allowed to increase, and you decrease this interest rate, right? So the money becomes a bit cheaper, and in this way the flow will go up, so more money will be there in the market. And the other one is vice versa, or you can say the contractionary, in which you increase interest rate and the supply of the money will come down. So I hope so far we are good here, right? If just in case if you have not understood what we have discussed here, then I would recommend all of you to pause this video here and go back from the starting of this lecture and go through it again. This will help you, because the reason why I am emphasizing here about an understanding is that until and unless you don't understand what we have discussed so far about the changes of repo rate and what repo rate is, what reverse repo rate is, how money can be increased or decreased and things like that, then the discussion that we are going to do ahead will be a bit difficult for you guys. Now dear friends, I'm sure you might have heard about this thing called demand and supply, right? Principle of demand and supply. Of course, there are many books in which you can learn this thing, right? You will find the theory and things like that regarding this demand and supply in your economics book, right? But if you are preparing for civil services and other competitive exams, and in general as well, this is a thing, this monetary policy is something that has a positive or negative impact on life of each and every person living under one system, right? Whether you know about it or whether you don't know about it, the decision taken by RBI, right, has a sort of direct as well as indirect impact on your life. And this is why it is important. This is what it makes this monetary policy a bit important. One more thing that I would like to add here is that, see, economics is something that you find in books, but economy is something that is out there. That is something that is live, right? That is something that is happening on. And if you want to understand what economy is all about, then the best thing is to observe things that are going on around you. I can present some examples that will help you understand what demand and supply is all about. Let's take your example, right? Say for example, your parents, I believe most of you are students, so your money, the money that you have in your pocket or your pocket money is coming from your parents, isn't it? So imagine that parents have decided that every month you should be given 1,000 rupees, right, as your pocket money. Now in today's era, we know that we have many expenses like mobile phone recharge and things like that, etc, etc. So 1,000 rupees is a very tight budget, isn't it? You have to be very careful, or 1,000 rupees is something that you can spend in a click. Now all of a sudden, as we are discussing these things here, right, about this demand and supply, your parents comes to you and they tell you that we have decided to increase this monthly pocket money of yours, and we have decided to raise it 10 times and make it 10,000 rupees. Imagine that from 1,000, if you are getting 10,000, first of all, you would have many plans in your mind, isn't it? You will think about buying that phone, or buying this, or buying a pair of jeans, or whatever. You'd be thinking about throwing a party to your friends and things like that, going for a movie and things, because the money supply has gone up, right? Here again we are talking about this demand and supply. So the money supply has gone up. As you are getting now more than that is required, the value of money for you will come down, right? If you go for a movie, when you used to get 1,000 rupees at that point of time, you will look for those theaters that charge less money, isn't it? Maybe 50 rupees, maybe. But now if you have 10,000 rupees, you know that every month you are going to have 10k in your pocket, so you would be opting for going for a talkies that has air conditioning and other things. And if the charge is 250 per ticket, then you are more than happy to pay for it as well. Same thing happens with movies, right? You know that many a times there is a sort of movie that you think you have to watch it on the first day, first show. And the thing with the movies is that, or the theater is that, you have limited amount of seats, say for example 50. So if 48 seats are already sold out, you have 2 seats left, right? And if someone has bought this 2 tickets as well, and he is standing outside this theater and offering you this 2 tickets, right, for say for example the original price MRP is 100, but he can give you 1 ticket for 200 because you want to see it anyhow. And now again you can apply your own self here. If you are getting 1,000 rupees, then you would say a big no to 200 rupee per ticket. But if you are getting 10,000, then you would say let's go for it, isn't it? Something that is very natural, happens with everyone. The product could be different, right? Here you would say that I would not spend that much money after a movie, but you would be spending it somewhere else, maybe after perfumes, or maybe after chocolate, or whatever. And again, let's take one more example that had a sort of impact on the whole country. Pulses. You know, a couple of years ago, maybe 1.5 or 2 years ago, this situation took place in our country. The pulses, basically, let me give you a brief example regarding pulses. In our country, majority of people, for them, pulses, right, they rely on pulses for their source of protein. I'm talking about people who cannot afford this chickens and all this non-vegetarian food, right? So most of the people, right, prefer pulses as a source of protein in our country. And this is one of the main reasons why all the things that we produce here, all this protein related things, this pulses and everything, is consumed here in our country. So what happened a couple of years ago, that this supply was down because of failure in crop and things like that. So the supply side was down, but you have to feed all these people, isn't it? You have, say for example, 50 crore people for whom pulses are a sort of a part of their regular diet. So what will happen here? The quantity of pulses is less. The people who are looking for pulses is as it is, the demand is stable there. So now the prices of pulses will go up. You can imagine this thing, isn't it? I'm sure things are a bit clear to you. I'm going very basic here because you have a range of students here, isn't it? You would have someone who is a pro, and you would have someone who is just who has just started learning this thing. So this is how it works, right? And same thing applies to the money as well. We will talk about how or what will happen. We have a slide there, and when we'll reach there, we will talk about that thing, right? So who does all these things, right? Who takes the decision regarding this interest rate going up or down, or whether this flow or supply of money should be increased or decreased and things like that? Dear friends, just a year ago, right, it was the RBI alone who used to take all these decisions, right? RBI was or you can say the governor of RBI and his team, his or her team, they used to take this decision regarding this monetary policy, whether the interest rate should go up and down and things like that. But you can imagine what happens. We have different people living in our economy, right? You have pensioners. For them, interest rate going up is good, because the more interest rate, the higher the interest rate, the more money they will have in at the end of the month. Then you have on the other side people who have taken or borrowed money from the bank, right? So they are asking for, or they would prefer the interest rate to come down. For a consumer, of course, the consumer would wish, every one of us would be more than happy if by the end of the month, if we can save some money, if the price of or the things that we normally purchase, if the prices of these things are down. And then you have businessmen who are looking for cheap loans. When I say cheap, I mean to say that they are bit cheaper than what they are at present. So they will go to the government and they will complain government, or they will persuade, or they will lobby the government to do something about it, and to somehow persuade this RBI to reduce this interest rate. So this was the thing that used to take place in our country, and RBI was under too much pressure and things like that. So this thing was certainly not working, because you can see here it was creating troubles. You have people who are saying yes and people who are saying no and things like that. So finally it was decided that there should be an expert committee who can provide some suggestions regarding it. At that point of time, the current governor of RBI was selected for this expert committee. He headed this expert committee, and then this Urjit Patel committee went through these things, and they came out with their report in 2014. And this committee said that rather than RBI focusing on too many things, it should just focus on inflation targeting, right? The main job of RBI should be just to ensure that the inflation is within its target range. And the second suggestion that came out of this Urjit Patel committee was setting up of a monetary policy committee. Now, what this monetary policy committee is, it has many members in it, right? One of the main reason was suggested under this report was for a balanced decision, so that we don't have this sort of situation, and we don't have government and all different stakeholders coming to RBI and lobbying it, and finally RBI is convinced that interest rate should be brought down. But actually, many a times we find that this is something that is not healthy for the economy. So this was one of the main reasons why this monetary policy committee was suggested, and now that's what we have, and it is working a bit well as well, you can say, because the main approach here is many heads are better than one, and this is the composition. This is your monetary policy committee. You have 3 members from RBI. The chairperson of this monetary policy committee is the governor of RBI, Urjit Patel. Then you have deputy governor, and you have an officer of RBI in it as well. And then you have 3 members that are appointed by the government of India. And so in total you have this 6 members, and let me tell you how it works, right? Just in case all the decisions, of course, has to be taken by majority, and just in case if there is a tie, imagine that 3 members are saying that interest rate should be brought down, 3 are saying it should go up or stay as it is. During this sort of scenario, it is the governor of RBI whose decision would be final. So if governor says that yes, we need to cut down the rate, then that would be the final. But in normal circumstances, it is based on the majority vote. And what has happened at present is that we know that this bank lending rate has been kept unchanged. It is 6% as we are speaking. And during this recent meeting as well, this Ravindra Dholakia, he said that there should be a cut of 0.25%. So rather than 6%, it should be brought down to 5.75%. That's what he suggested. But this 5 members said that let's keep the status quo. That means keep the things as it is now. Now it would have been a bit better if there is no harm, or at present the things are fine. A reduction of 0.5 was not that negative, I would say, because the liquidity of the banks is bit down, because the thing is, during demonetization, we know that people started depositing their money in the bank. So at that point of time, bank was having huge amount of money in its hand. But nowadays what is happening, and this is a bit strange thing that is taking place in our country, is that even if the GDP growth is not good, you will have money coming in to your share markets and your mutual funds, right? And at present you can see that mutual funds are giving more returns than keeping money in your saving account. And that's what is happening at present, that people are diversifying, or you can say that the money is flowing towards this mutual funds from the bank. And this has created a sort of tight situation for the banks. So a sort of reduction would have been appreciated, but then we have other reasons as well. Now coming to this monetary policy, dear friends, this is the 5th bi-monthly policy review, right? We know the repo rate is kept unchanged at 6%, and I was talking to you about this 25 basis point, and you hear these things, right? Basis point this and basis point that. What this is all about: 1 basis point, or you can say 100 basis point, basically means 1%, right? So it means 1%. So when you say that there was a reduction of 25 basis point, then you know that we are talking about 0.25%, isn't it? When you say 50 basis point reduction, that means we are talking about 0.5%, 0.50. So this is what basis point is all about. And the decision of keeping the status quo as it is something that was expected, right? A poll that was done by Reuters. I'm sure you know Reuters is a very famous news agency, and a survey done by Reuters indicated that out of 54 economists, 52 said that things are going to be as it is. And you also hear this sort of terms called neutral stance. What neutral stance is all about? Neutral basically means, I'm sure you know how cars and bikes operate, right? You have a neutral gear. That means you are not in a gear, but you are in neutral. Engine is not doing anything. So that's what you do in the neutral stance, right? When I say engine is, I'm not being too technical. What I'm saying is that you are staying there as it is, right? So that's what RBI does. When it says that it is going to take this neutral stance, means it is just going to sit down. There is no going you cannot expect any sort of interest rate cut down, or any changes will not be entertained for time being, right? And then you have another stance that you hear about is accommodative. Accommodative means you will keep a close eye. If required, then interest rate can go up or go down depending on the situation. So that stance is called accommodative, and this one is called neutral. So neutral means forget about any sort of changes in near future. And as you know, the main job or the objective of RBI after this Urjit Patel committee was to keep a close eye, or to ensure that inflation is in a healthy level, and the target is 4%, right? Consumer price index should be at 4%. Of course, you have some breathing space here, +2 and -2. So this is the bracket that I was talking about. So you have at this end you have 2%, and at this end you have 6%, right? Your target is to keep it at 4%. So a bit of going down and going up is fine, but it should not exceed this 6%, and it should not be somewhere below 2%. Ideally 4% is great, right? If you are somewhere nearby 4%, bit lower than 4%, then that is a good scenario. But what has happened here is that RBI expects that this inflation can go up. It can clock 4.3 to 4.7 in Q3 and Q4, and this is a matter of worry, because inflation is a general rise in the price of things, isn't it? And now you can imagine that if there would have been a reduction in interest rate, imagine from 6% RBI decides that let's bring it down to 5%. So there will be a flow of money in the market, isn't it? And now if the flow is increased, the value of money will come down. You will have more money in your hand, the money will become cheaper. Now if the supply of money is if you are getting money at cheaper rates, right, you'd be happy to spend a bit extra. And in this way, the people who are selling things in the market, they will say that okay, there is a space, people are ready to spend money, people have money, things like that, so let's increase the price of this thing and make bit profit out of it. This is just a layman's example, but that's how things work, right? So this will kick in fact inflation, and it will become a bit of trouble for the bank to keep it under 6%. So this is one of the main reason why it has decided that let's keep it as it is. Now let's see why there is, or why RBI is a bit skeptical or fearful about this inflation. What are the reasons that we can see that has that is going to kick this inflation? See, coming to this, at present we know that vegetables and fruits are a bit expensive in the market. Of course, the winter season has just started, so the prices are going to come down. The new products will be out in the market, fruits and vegetables, but at present things are a bit expensive. The other thing is that the kharif production, agriculture production, compared to the last season is bit down as well. So this is the thing. Now you can imagine demand and supply here. The other side is crude oil prices are going up. So far the prices were down, but now the things that are going on, political situation going on in Saudi Arabia and going on in Yemen, and you know, this OPEC countries, oil producing countries, they have decided to cut down their production, right? They are going to control their production, and now you can imagine again supply and demand we are talking about here. That supply means the petroleum supply will be taken down, and demand is there, so this will again increase the price. Then you have the 7th pay commission thing, this HRA, that means the house rental allowance has been provided in the hands of, or the employees are going to get, government employees are going to get some more monies, some more money when it comes to this 7th pay commission. So they have more money in their hand, so they would be after this rental houses and things like that. So this will increase the price of house, and these are some of the major reasons. Then you have another one, that is fiscal slippages. What fiscal slippages it is all about? See, the target, right, fiscal deficit target set by government is 3.2% of GDP, but as we are speaking now, government has already crossed this 96.1% of this 3.2% of GDP. That means in near future government is not going to have that much money that it can spend in the market, So government will have less money. And then this farm loan waiver promise government has, state governments have to take out money from their own pocket and pay it. So this is going to reduce the money that is already there in the hands of the government. Then you have this reduction in GST rates, that means less revenue. So government would be having the pockets of government, you can say roughly speaking, for this year as per the budget is, in layman's language you can say the government is running out of money, right? So till next budget government will not cross, government has said that it is not going to cross this 3.2%. The other thing is US Federal Reserves, right? It is said that in December 12 and 13 policy review, it can this US Federal Reserve will increase interest rate. So why it matters? The thing is, imagine you are a person from USA, you have invested in bonds in India because the interest rate was down in your country, in USA, but now the federal bank is going to increase the interest rate, so you will make more money by keeping or investing your money in Reserve Bank's bonds rather than keeping in India. So what will happen is the money will flow out of our country, right? So this is also going to create some troubles for us. So these are some of the reasons why RBI, these are the major reasons why RBI has decided to keep things as it is, and these are some of the reasons why RBI thinks that inflation can go up. Now let's see the challenges, right? As I told you that one person from this monetary policy committee was saying that there should be a reduction of 0.25%. But the thing is, dear friends, if we go back in the history a little bit in the past, then we find that during this era of Raghuram Rajan, in total there was a sort of reduction of 1.75%. 1.75% is not a small reduction, but the transmissions, right, means how it should be that if RBI is reducing 1%, then ideally SBI should reduce 1% as well. But our banks are not able to do that because they are having huge amount of non-performing assets. They have to make some money, isn't it? This is the gap, whatever gap they have, the difference they have between the money that it is the interest rate that RBI charges on them and the interest rate that a bank charges to its customer, whatever the difference is, that is their bracket of profit. So transmission is something that should take place. Without transmission, reduction at this level is not going to help this. The second thing is that we don't have any sort of mechanism, right? In developed countries you have this automatic mechanism. So if the RBI is reducing interest rate, then or the central bank, federal bank is reducing interest rate, at the same time automatically all the banks have to follow it. But here what happens is that you have to nudge, right? That means the RBI will tell the banks that do this and that, but at the end of the day it depends on the bank whether it wants to reduce it or not. Then you have this lazy banking thing that is going on. Lazy banking means the banks will think that if I'm earning enough money from government bonds or this SLR, then why I should bother to reduce this interest rate and look for more customers and things like that. Now some of the other challenges that we are seeing at present are the private investors are not that confident. We know that government has spent enough money, government has taken many steps as well, but now government is not having that much money in its hand till next budget. So it is the private investment that has to pick up, but for that it is the government that has to create a sort of positive environment. The other thing is agriculture sector is also not doing that good, and livelihood is a thing. If the people of countryside or the people living in the rural area, if they are having as you can say regular or a reliable source of livelihood, then you can imagine if they are getting money, if they are earning money, then they will spend this money for all the things that are produced in factories and in urban area. But if they are not able to do that, then of course the demand will come down, isn't it? Because the supply of money is not there, and then you have this construction and other business on which this rural people, they rely on this construction and manufacturing business as well, because when they are out of this season, right, when you don't have anything to do with your farmland, then you will go and search for the work here. But the construction business is down as well because of various things that are going on. There is a fear of GST. It is believed that it is not right, nothing official has came out yet, but there is a fear that infrastructure may come down under GST. Then you have this RERA thing that has just came out. We don't know what RERA is all about. People are a bit skeptical about RERA. When I say we don't know, I mean to say that there are many people who are a bit, they are cautious regarding RERA. And there is a demand and supply mismatch as well. There are many houses, speculative construction was done, believing that everything will be sold out. But at present, we can see that many sites are lying idle. They have constructed these houses, but they're not able to sell it, and they have to pay interest rate and all these things. So this is creating more trouble for it. So what can be done regarding agriculture, right? Ease of doing farming, right? We have to create an environment. Government has to create, like, get rid of all these laws that were against this selling and purchasing of cow and domestic animals, and then you have to increase this cold chain supply for villages, and this direct selling or intermediaries going away, and all these things will change the scenario of agriculture. And of course, government has spent money in infrastructure. This should be, means public spending or public investment program should be focused on constructing roads, because if you construct roads, then you connect different villages and cities with each other, and this creates a sort of economic opportunities. With it brings connectivity, brings economic opportunity. And in the end, I would say that rather than bringing down this point percentage and things like that, it is better to focus on this bigger things, right? Recapitalization. We know that RBI as well as the banks are quite happy about this recapitalization, but we have to ensure that this NPA thing is not repeated. Until and unless we don't look after all these things, we are not going to see any sort of positive change. So I hope things are a bit clear to you now, right? Do let me know what you think about it. And don't forget to subscribe to our YouTube channel, and I will share this lecture on my Facebook page as well. Do share it with others as well. Do let me know whether you got everything or not. With this, I end this discussion. I will see you all soon. Till then, enjoy your studies.